All right, we're live. So let's just do a quick update today in the market. It was, other than a good day, it was a pretty good day in the markets, and we're continuing the rally from yesterday, making back some of the gains, a little bit of the gains from the last week and a half. Well, I shouldn't say that. The banks are making back some of the gains. The market last week, as far as the Dow, S&P, Nasdaq, Dow and Nasdaq were actually up last week, continuing into this week. Uh, Dow is down slightly last week. It's up nicely this week. So it's actually shaping up to be a good week. We're continuing with the rebound and bank stocks. We're going to talk about that. But really, you know, all eyes are on the Fed. So let's just roll the quick intro and we'll get into it. Stick around. This is going to be good and quick. All right, we're back. Thank you very much for joining me. And we're here. And you're there. That is apropos of absolutely nothing. So let's just do a quick rundown of the markets today. First, just like this scoop, okay? You had a massive sell off in financials. It started to bring down other sectors. But other sectors have all of a sudden recovered, including industrials, consumer staples, consumer discretionary, and especially technology. As of now, Apple and Microsoft represent about 13% of the entire S&P 500 index, which is pretty huge. You can't invest directly into an index, but you can invest into a security that tracks your mimicking index. So we just have to get that in there. All right. And what's going on here is this. So far, the actions taken by the FDIC, the Treasury Department, and the Federal Reserve are helping. It's helping to arrest the fear and the panic. There was a big rush of money being moved around from smaller banks to larger banks. I'm not saying, I'm not sure how you want to quantify a larger bank. I mean, we know the big banks, JP Morgan, Bank of America, Wells Fargo, and Citi. And then underneath those, there's another tier of banks, PNC, US Bancorp, in particular, are really very big banks also. And then you've got smaller banks like Huntington Bancshares. Not that it's a small bank, but it's smaller. All right. You've got Fifth Third and Zions and a few other banks. So money went from the smaller regional banks and small banks to larger banks. I don't know if money went from a small bank to a regional bank where people just said, screw it, I'll put my money in Chase and, that's the end of it. However, it looks like a lot of that has stopped moving, the money in motion. Banks, the government has guaranteed deposits of Signature, which is now actually being taken over by New York Community Bank subsidiary Flagstar, or brand name Flagstar. So that's Signature Bank. The Silicon Valley Bank, all deposits are guaranteed, so nobody's going to lose money. And then we have to get to First Republic. First Republic is in between. They didn't fail, so they didn't get a guarantee of deposits. But if they do fail, they do get a guarantee of deposits, and the stock gets wiped out. So with the Treasury and Jamie Dimon, CEO of JP Morgan, JP Morgan pulled together a few other big banks, piled together, about $30 billion and deposited that money at First Republic as a strong vote of confidence. And it helps First Republic meet withdrawal needs of its depositors. And of course, we know about Credit Suisse being taken over by UBS in a forced shotgun marriage by the Swiss government. However, it all seems to be helping a little bit. Now, is this a pause or refreshes? Is this a bounce? I find it hard to believe that we are over and done with the banking crisis just like that in a day. But then again, we did go into this seemingly overnight. Like we didn't see a banking crisis start and unfold in front of us. We just woke up and we were in one. It was just so sudden. We shall see. But so far, investors are breathing a sigh of relief. There's an awful lot of short covering going on in the regional banks. Now, regional banks have always been this nice, polite, safe, or I should say conservative place to be. Bank stocks, especially regional banks, they don't move up a lot, they don't move down a lot. They kind of are just very slow and steady. They pay a nice dividend. Managements of these companies are just really conservative with how they manage these banks. And all of a sudden, we're in this storm of, terrible things with what is typically known as a, you know, widow and orphan place to be for stocks, the regional banks. Will we get there? Will we get back there? It'll take some time. All right. It'll That's the best I could tell you. I wish I was smart enough to tell you, oh, they're going to do this or they're going to do that. And I know there are a lot of market callers who are making calls constantly wrong, by the way. I mean, you know, eh, so many of these market soothsayers and strategists have been making calls. And I guess if they make a good call, they'll be right and they'll be invited back on to whatever media outlet they made the call. I'm on a media outlet every day, but to make these calls like, something, or they say something like, oh yeah, the regional banks should be okay. Well, but it could take some time. It won't be so good. It might not happen. It's like, which is it? They always say a little something to wiggle out of being wrong. Well, I did say I might be wrong. I did say they might not recover. I did say it could take a long time. It's just not helpful. So I'm going to give you helpful information. Stop worrying about whether or not your stocks or your investments are going to go up now or if they're going to take a little while or a long time to work. Invest. Give yourself time. That's what you do. And things should work out. Should. I'm not making a guarantee. Maybe the market just goes down and stays down and never comes back. Although I don't think that's what happens. I'd be looking for a new way to make a living if I thought that would happen, right? So we recover, but don't put the pressure on yourself and say, I have to buy I have to buy a regional bank now. It's got to go up and I have to be sure and I need to know. If that's your investment strategy, I call that the Sunday punch strategy. You might be right once in a while, but all you have to do is be wrong once to wipe out the gains of the last 20 times you were right. It's simple as that. So I don't want you to do that. Just give it time. Just diversify. Diversification, remember, it's a strategy we use to mitigate risk, and it doesn't necessarily protect your portfolio from going down a generally down market. The reason we want to mitigate risk is by making fewer mistakes instead of focusing just on big returns, you'll wind up doing better long-term, I feel. I feel very strongly about that. So that's why. All right. So people just talking out of both sides of their mouth on TV about which stock is going to go up or this or what's going to happen next. It's just like everybody said, oil's going to do this and do that during the Ukraine war. And for a minute, people are right. For a minute, they're wrong. I'm sorry. I'm kind of on a rant now. Let me get off that rant. Let's take a look at how the markets did today. Okay. So, by the way, while you're watching, how about a thumbs up or a heart or a wow reaction, depending on which social media platform you're watching from. If you have any questions about what I'm talking about, or you just want to say hi, words of wisdom, words of encouragement, that's always appreciated as well. So the Dow up 316 points, was up a little over 380 yesterday. So, we're working on about a 700-point gain between yesterday and today. NASDAQ up 1.58%, S&P up 51 points. Pretty good day. Gold continuing to fall. Why? The safe haven status that gold had when it seemed the banking sector was going to fall apart and spill over into the rest of the economy, the fear has gone away. So the safety trade, the run to safety, the flight to safety trade, or the fear trade in gold has subsided. So gold is coming down. If you notice VIX, the VIX, the fear gauge is also down to 21. That's a pretty tame market when the VIX is down to 21, and the 10-year yield, yields are going up. So people are starting to move out of bonds because they're just the fear is starting to dissipate from the banks. Okay. That's really what's happening. We'll take a look at some of the shorter term stuff. The 6-month T-bill is almost back to 5%. That seems to be the magic number when people really want to jump into short term treasuries. The nice thing about a short term treasury is that it's exempt from state income tax. So if you can get that, or put 5% 6 months in your IRA, I mean, for a lot of people that makes a lot of sense, and it's a good alternative to the stock market while you're waiting for things to pan out. But 6% in your IRA for you, that could be like 7 or 8% on a tax equivalent basis. So it's a pretty good deal for a lot of you, and I wouldn't ignore it. And I think for many people, for many people, bonds are an important part of a diversified portfolio. All right, so I want to answer a couple of quick questions, and then we're going to get going. Could you open up a Roth IRA for your minor child? The answer is yes. But someone came to me today and said, I want to open up, a good friend of mine wants to open up a Roth IRA for her kids. Your kids need earned income. That's the problem. Earned income. And if you have a 4-year-old or a 3-year-old or a 6-year-old, they have to have earned income. And it's kind of tough to say they have earned income when the kid is like 5 years old, right? So the answer is yes. But typically when the kid's in high school, they work for a summer camp over the summer, or they work for the supermarket, whatever they do. If they are getting paid with a record of it, like a paycheck, a pay stub, W-2, then they could put into an IRA whatever they make up to $6,000. That's what they could do. It's a nice thing that they could do, and it's good for them to do it. All right, you think about 40 years, 50 years go by, how much that money will be worth, and they take it out tax-free. Okay, the other thing is this. When is a good time, or what's like the latest I would advise somebody to do a Roth IRA conversion where you transfer a traditional IRA to a Roth? 62. And it has nothing to do with Social Security. It's just that the age of 63, the year you turn 63, is the year when your income is viewed when you turn 65 to start getting Medicare. And if your income is up too much, over 90,000, you get penalized and you pay more for Medicare. Just letting you know. So some of you, that might not bother you, but that's something that definitely comes up into the conversation. It's not a hard stop, 62, but it's definitely something that is a good conversation starter. Okay. Backdoor Roth IRA. Backdoor Roth IRA is this. Even if you contribute to a retirement plan at work, a 401k, you could still open up an IRA and fund it up to $6,000. You just can't deduct it. So you put the money into an IRA, it's non-deductible because you're not deducting it, and you flip that money right over to a Roth IRA, and you're set. Okay. I just want to be clear. For 2023, it's $6,500. Okay, so when you make an IRA contribution, Roth IRA, traditional IRA, or you want to do a backdoor Roth IRA, it's $6,500, $7,500 if you're 50 and over. Okay, the limits just went up in 2023 from 2022. So that is the story for the day. Some good personal finance. I will be out for a couple days. I'm going to take a little break from the live stream, but I'll be back to you next Monday. So I wish you all a good rest of the week. I'll be around if you need me, if you want to have a private one-on-one conversation with me about your financial situation, your investments, your financial plan. Could you retire? Things about Social Security. You are welcome to reach out to me. Check out clientfirststrategy.com for all of my contact information, and I will see you soon. Thanks so much.